overcome, and we're going to head out to Los Angeles to do that. We're talking to David Sussman, the CEO of Valcor. Thanks for coming on, Dave. How are you?
Good, Lauren. Thank you for having me back.
And just really quickly, can you tell me what Valcor is?
Well, we're a business restructuring firm. We're an advocacy firm that works with small businesses.
Yep.
We help them restructure their debts. We bring in capital acquisition, and we have over 100 licensees throughout North America.
Yeah, and access to financing, and David was really coy on this when I asked him earlier, but it's hard. It's hard to get the banks to give you the capital to expand or even just give you the capital to start. So what are some ideas that you have for getting money or alternative ideas for getting the capital that you need?
Well, businesses need to be nimble in this environment right now.
Nimble.
We're facing a trifecta of nimble, very nimble. We're facing a trifecta of business problems right now where we're dealing with banks approving, at the end of October of 2011, they were approving 48.5% of business loans that were being applied for.
Right.
At the end of April, we're down to 31.8%. So the banks may not be the best resource right now for small businesses. We're finding that we're dealing with, obviously, international conditions, as you were just talking about, with the Eurozone. We're dealing with a China slowdown, so manufacturing and factory orders are slow. Banks, when they're taking a look at receivables and they're seeing that cash flow is really slow, which is the lifeblood for small businesses, they're not approving most of those loans. Mm-hmm. So small businesses have to find capital elsewhere. And there's a lot of different alternative financing sources that exist out there today for small businesses that are looking for that capital to invest into the business.
All right, let's
and
go
keep
through
the business going.
what those sources are.
Well, alternative sources really at first need to start focusing on asset-based lending.
Okay.
As a business owner, what assets do you currently have that could be borrowed against?
Okay.
Are you looking at what are your receivables like right now? Do you have money that is owed to you? You can actually finance on those receivables. Do you have commercial real estate that you could borrow against? Do you have equipment that could be borrowed against? Contracts and orders, work in progress. There's multiple different options that are available for a smaller business owner today that may otherwise not have an option with the smaller banks.
We're going to pull up a full screen which says asset-based lending options, commercial real estate, but I need you to, those two I get, but I need you to explain hard money loans as well as mezzanine financing. What are those two, Dave?
Well, hard money loans is basically a higher interest loan that is provided for small businesses today that really don't have any other options. It wouldn't be my first choice to recommend a small business owner go in that direction because of the cost of those loans. But for some small businesses, they really don't have another option.
Well, how high are the interest rates in some cases?
Well, they could range anywhere from 12 to, in some cases, extremely high, in the high 20% range. We're seeing a lot of those loans right now in the 15 to 20% range. So, yes, they are very expensive.
Are there certain businesses that need that sort of loan or typically go for that sort of high-interest loan? Do you see it in certain industries more than others?
Well, yes. A lot of industries right now are suffering short cash flow problems. Manufacturing, a lot of companies in construction right now have had their lines of credit reduced by the banks. Mm-hmm. So they need a short-term loan. And a short-term loan could be 6 months to 1 year. Do not look at this as a long-term prospect for yourself because it is very, very expensive.
Right, so you pay that 15-20% interest rate for a set short period of time in and out, and hopefully you're back on your feet.
That's correct. And they may be... Yeah, and Lauren, what they're looking at is that they're eventually going to get some infusion of cash flow from their clients that may just haven't been received yet. Wall Street Journal just reported that the time that small businesses are getting payment from their creditors is being increased dramatically. So people are waiting for that cash to come through. You can borrow against that cash.
I hear that so often that you have smaller players wait. They have the business. They're just waiting months before they get paid by oftentimes their clients, which could be bigger players in the industry. So it's like you're struggling to make payroll and you're embarrassed to ask someone who owes you money, hi, remember I sent you that invoice, can you follow through on it? That's a good point, and that's embarrassing for a lot of small businesses out there. Hey, David, what's mezzanine financing?
Well, mezzanine financing is really, think of it as the equivalent of a second mortgage. If many people watching you today have got a second mortgage on their house because they were unable to get the full financing for their first mortgage. The bank wasn't interested in financing, let's say, 100 cents on the dollar. So they may get a loan to value of 70%. That other 30% would be a higher interest loan.
Understood.
It's a mezzanine situation, and it's a higher interest case as well.
What would you say to the fact that someone might say, well, strategies like this kind of, in a way, got us into the crisis that we were in 2008 and 2009. It's kind of like if you don't have the money, you shouldn't be expanding and you shouldn't be doing things when you don't have the financing. Don't play with money you don't
You're
really
absolutely
have.
You're absolutely correct when it comes to the consumer, but when we're talking about small business owners, small business is the lifeblood of this country, and it is what is going to get this country out of this. Quite frankly, I think we're in another recession right now.
It feels
and so
like it.
small businesses, it absolutely does for many of our clients as well. Small businesses, when they go to the banks and the banks take a look at their lack of cash flow, they take a look at their lack of assets, and if you have any blemish on your report at all in the past few years, they're not going to lend to you. So these small businesses need that cash so that they can go out and hire and reinvest back into their business, hire more people, expand, do research and development, and bring out more products. That is what is going to get this country out of this recession, if not depression.
Yeah, desperate times call for desperate measures, and I'm just going to our chat right now, and we asked, the question that we asked was, would you use these alternatives, these four alternatives? And David Larson writing in says, not really. Some of these are more like loan sharks. Well, short-term fixes.
Yeah.
But I guess that's what some conservative thinkers, like my father, would say. We have about a minute left, David. Can you share with us a success story of a business that you advised and they did something extravagant and it really made out very extravagantly for them?
Well, when we're talking about some of our clients, we have clients throughout North America. Our focus is to try and get conventional loans for our clients and to do business restructuring by reducing the debts that are owed as well. So just to answer David's question really quickly, again,
please.
we're talking about extreme circumstances, and I certainly wouldn't recommend anybody to start looking at hard money as a primary option.
Right,
it's
and you've
only
made that
when your
clear
back is up against
times.
the wall.
Yeah, we appreciate that.
So,
definitely clear.
as far as the success story goes, we're working with a client right now. We're restructuring a whole consortium of gas stations and convenience stores. This is a situation where the bank is looking to get their loans paid off. We're talking about $50–60 million here. And what we are doing is we're wrapping all of their loans up into one situation. We're reducing the debts that are owed to the bank by doing a takeout situation, by bringing in money from other lenders, and these are more conventional-based loans, to buy out the loans at a discounted rate from the primary bank, allowing this business with hundreds of employees to stay in business. And obviously, when you have hundreds of employees in the business, you're talking about hundreds of families that are depending upon those paychecks every single week to put food on the table. And so what we are seeing is by attempting some of these strategies for some of our small business clients right now, we're saving companies that are saving jobs. And for us, it's extremely rewarding to see that, especially in today's economy.
Yeah, small businesses, the backbone of America, probably employ about half of American workers out there. David Sussman, thank you so much for coming on again. CEO of Valcor. ValcorWorldwide.com is your website. And we can find you on Twitter at Valcor Worldwide or on Facebook.com/ValcorFB. Thank you so much.